We're gradually making our way back from the West Coast after hitting up NVIDIA's GTC event earlier this week. Hey, now we're in Vegas. And while we're out here, I figured this would be the perfect time to check in on Wynn Resorts, the casino kingpin with operations in Vegas, Macau, Boston, plus new project that we're going to talk about, UAE. When Wynn last reported mid-February, they delivered a shockingly good quarter, and the stock caught fire. But since then, it's pulled back substantially along with the rest of the market based on the worries about the consumer. So is this a buying opportunity, or does it really make sense to be concerned? Boots on the ground. Let's figure this out. Let's check in with our host for the day, Craig Billings, the CEO of Wynn Resorts. Mr. Billings, thank you so much for having us. Welcome to Mad Money.
Thank you, Jim. Great to be here.
All right. Not all casinos are created equal, and unless you've been out to Vegas, I have, you might not realize that this is really the deluxe place in Vegas. How does it distinguish itself? Why is it the destination for even the Eagles? And I'm not talking about the Eagles that are in the Sphere. I'm talking about the Eagles that are from Philadelphia.
Right, the important Eagles.
Yes.
Well, I tell you what, if you look back over the course of the past 5 years, our EBITDA per room premium that we have relative to our two biggest competitors has grown 150%. We always ran at a premium, but it's grown at 150%. So how do we do that? Of course, we have a very strong legacy of amazing design, which you can see in this room, of amazing service, but we've also evolved the business a lot. We've evolved our food and beverage. We've evolved our retail. We've evolved our programming. Really, there isn't a component of the business that we haven't made tweaks to, really in order to make sure that we are the place to see and be seen in Las Vegas, and that's paid dividends.
Now, one thing that I don't understand, and we're going to work our way through this after we talk about the properties, is that your market cap's $8.7 billion. You have $2.4 billion in cash. I know there's debt, but let's put that away. I think that this palace right here could easily be worth $8 billion if you had to build it again. Mm-hmm. Your other properties are even more expansive. Explain to me, if you can, the disparity between trying to build a new casino like this and what your stock price is.
Well, I guess avoiding the vagaries of the market and where the money flows have been over the course of the past couple of years, which has been disproportionately into technology and AI, as you well know. If you look back at our total shareholder return over the course of the past, against really our top 5 competitors, over the course of the past 6 months, 1 year, 3 year, 5 year, we're either first or second. So I really think it's an industry issue. Certainly we feel like we're undervalued, which is why we've been buying back a ton of stock, frankly. So as we look forward, what do? I think the most important thing we can do is continue to produce significant EBITDA out of these assets. Mm-hmm. We had a record EBITDA year in 2024. We have to continue to delight the customer, and that shows up in our net promoter scores, which are higher than they've ever been, actually. And we have to execute and deliver on our significant, I believe, the best development project in the industry in the UAE.
Okay, let's go there. You're talking about a project that's $3.9 billion. Now, at the time of your conference call, you had finished up to the 35th floor. Where are you now?
42nd.
40. And how high are we going to make it?
70.
Holy cow.
We do, believe it or not, we do about a floor a week for the exterior.
And when that's done, how big is the gaming market there, and what do you think you're looking for?
Yeah. Several analysts have come out with gaming market estimates ranging in the $5 to $8 billion range. So to put that in perspective, the Las Vegas Strip, a little over $6 billion. So that's a substantial market opportunity. The project is about 5 million square feet, 1,500 rooms, 25 food and beverage restaurants.
1,500
rooms.
Okay, there are not a lot of places that are that big.
No, it's substantial. An ample gaming floor, and then a production show that actually we're creating from scratch. So we're really, really focused on the wealth and affluence and population in that market.
Now, I know you bought a place in London, and I thought that was a great gateway, because that you need to have UK know that that's now, I guess, the biggest, safest, most fun place to go.
You're right. So, and you framed it well. So it was a small acquisition in dollar terms, but a big acquisition in strategic terms, because not only did we buy a database of customers that are from that region, many, many customers that we will interact with in the UAE spend time in London every year. And so that's a real opportunity to continue to delight them and build the relationship with them.
Now, Macau, I've always felt that you own it. You've got incredible properties from the days of Steve Wynn. But I also know that you're dealing with a captive audience, so to speak, with the government. What are they doing? And who's coming now? you have good mass and good regular, so to speak, or high end? Describe to me what's happening in the state of play in Macau.
Sure. Two things on that. First, the way we see Macau is here you have a market that's 5 times the size of the Las Vegas Strip. China's obviously the second largest economy in the world. Macau, for us, plays an important role, really from 2 perspectives. The first is it drives free cash flow that we can deploy and use to continue to grow. And the second is it drives cross-property play. Our market really is the premium end of the market there. So if you look at gaming revenue per table, we do more than anybody else there because we really service the premium end of the market. Right. And that market has been relatively healthy over the course of the past couple of years.
And then you have Boston, which I don't really understand why. Maybe you can tell me. I know the guys from Vici tell me about the property, but why Boston?
We'll look at any gateway city that has a substantial population, substantial airlift. So Boston was very unique. It was a unique time and place, and it's a unique market. And so Boston, which is primarily a gaming business, less on the non-gaming side, it's great. It chugs along. It produces cash. Again, we can redeploy that cash. And it's a stable place.
Now, when I think about the buyback, and I think about the fact that you've got a great land bank here, what you can do in Dubai, I don't know. I don't know whether I want to buy back stock or build still one more place. But the stock may be the best buy of all of them because otherwise you don't think your place is as inexpensive as it really is, right?
Right. Right now, I think you're right. So we can look out to the free cash flow profile in 2027. Right. We can look out to the step change in EBITDA from the UAE, and we like the returns we get from the stock. By the way, our land bank is in the UAE too.
Right. So you can do more there.
Yes.
I think there'll be people who say, well, wait, who goes to the UAE? I know that when you're in our business, people are I'm going to say it, the rich people in business go there. All right. But describe to people the UAE and why people say, well, why would I ever go there? Because it is kind of like a vacation paradise.
Yeah, 3 things that are great about the UAE. First, investors are lauded. Foreign direct investment is appreciated. It's incredibly stable. The governance is strong. Second, there's 10 million people. Okay, compare that to a U.S. MSA. There's 10 million people. 80% of them are expats. They're not Emiratis.
I don't know that.
80 million, over 80 million of airlift in Dubai, at the airport in Dubai. That's 45 to 50 minutes from our property. That's substantial. It's very significant airlift. And third, we will be the only operator there for a significant amount of time.
Oh, my God. Well, I love it. The problem with here is there's so much competition. No competition is fantastic. We're going to take a break. More to come with Craig Billings, CEO of Wynn Resorts, after the break. Yeah, bye.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.